Hello, friends. Once again, I have Sanjeev Gupta, CPA, with me today, and we are going to talk about something extremely important. You see, what happens is every single year, we have people coming into our offices to set up entities. They want to set up LLCs, they want to set up S corps, C corps, partnerships, all kind of businesses. And once you have that business set up, then obviously you need to get paid from that business. And we see a lot of mistakes people make in as to how they take the money out from those companies. So that is exactly what I want to talk about to Sanjeevji because of two reasons actually. Number one, if you're thinking about setting up a business, maybe you're buying a real estate and you're setting up an LLC or something else that might requires for you to have an entity, is how are you going to get paid from that business? So that's one thing I want to talk to him about. And number two is, how should you take that money out so you pay minimum taxes? That's also important as well, right? And third, which is often ignored, is protection. Are we making mistakes that can end up cost us? So we have so much to talk about to Sanjeevji. We're going to answer all of those questions today for you guys. Now, if you still have more questions, then I will encourage you to join our upcoming webinar that is happening in February, the first week of February, February 7th. I was thinking maybe we should do it around Valentine's Day, but Sanjeevji liked to celebrate that particular day wholeheartedly, so we decided to skip that. So we're going to do it on February 7th. So just go to sanjeevcpa.com and sign up for that webinar so we can talk more about that. In that webinar, by the way, we're going to talk about how you can prepare yourself for the upcoming tax season, right? So you guys all getting ready to file your tax return. It'd be kind of cool to know what should we do, what we should not do, where do we people make mistake. So it'll be kind of a refresher, at tax time, you can't go to a CPA and expect them to spend 2-3 hours with you, explain to you how do you organize the documents, what is important, what is not important. So, let's do it as a group. Let's figure it all out. We'll have Sanjeevji with us. I'll be there. We'll walk you through all that. So that's a webinar. Go to sanjeevcpa.com. February 7th, that's when the webinar is. So Sanjeevji, first of all, Happy New Year to you. I think this is
Happy
our
New Year
first
to you and
video
Happy
for
New Year to
2026.
yes, Happy New Year to you and Happy New Year to everybody who's listening,
Right?
who's watching us.
So yeah, it's a great year, and President Trump going to make it just as exciting as he made the last year. So it's going to be a fun ride. So today, I want to talk to you about these LLCs, S corps. How are people? What do people need to pay attention to? Right? Like they set up these entities, and then they want to get paid. How do they do it? What are the key things they need to keep in mind?
Okay, so let's start with the LLC part, which is a very important area because everybody likes LLC. Even the attorneys prefers LLCs. There's a buzzword, form LLCs. So when we talk about LLCs, LLC, why people talk about LLC, why attorneys like LLCs, why everybody likes LLC? Because it's a very flexible structure. It's not like we have to have a annual meeting or you have to make like kind of quarterly meetings or kind of is governed by regulations very strictly. A lot of court cases are there which are governed, which are saying in a particular corporation setup you have to do this thing, you have to do that thing. LLC is a fairly new concept. When I say fairly new, doesn't mean it started like this year. It started years ago, but it's more it's not a lot of court cases are there on the LLC structure. When I say flexible, because it's done by operating agreement, and operating agreement is the governing document for the LLC structure. And in that operating agreement, you can be very flexible with what you want to do with that entity. For example, if two people coming together and forming a multi-member LLC, one person putting money, one person putting the efforts, they can say in the operating agreement, a person who's making efforts, who's doing the efforts, you can be paid a guaranteed payment or the salary of that. Person who's investing money will be saying, I might be paid interest on my loan, treat it as a loan, or you can defer, or you can try to shift the profit and loss share in the operating agreement. So for example, the person who's putting money can say, I will take 30%. The person who's working in it can say 70%, or he can lower the guaranteed payment. So much flexibility is there in the operating agreement. The operating agreement is the governing source. In case of S corporation or C corporation, the articles of the bylaws matters a lot. But again, in addition to bylaws, the court cases are there, which overrules a lot of things in the bylaws too. The minutes and everything are there for the shareholders, for the shareholder meeting and other things for the S corporation. There's not no such things other in LLC. That's why LLC is a very important structure entity for a lot of businesses. But the very important thing about LLC one should remember is uh, because of the because of the flexibility there in LLC, one has to really do it in a way that does not impact the taxes too much. For example, in case of LLC, if you don't take any salary and pay yourself profit, you're subject to self-employment tax. What is a self-employment tax? Self-employment tax is Social Security tax and Medicare tax, which you pay in addition to income tax, which is like it goes to your personal return. So when you talk about entities, this is an important area for LLC one should be careful about. And you should also be careful about the state in which you're incorporating the businesses. For example, in California, we have LLC gross fees. You're paying fees based on LLC gross receipts. Starts around $900, can go up to $11,000. Depends on the gross sales, not the net sales, not the net profit. It's based on the gross sales. In case of S corporation, you pay California taxes of 1.5% of the net profit. So which is good for you. It depends upon a lot of things. So what I'm saying here is it's very important to understand the nature of the business you are in, the state in which you are in, the nature of requirement you have in. Uh, so so you have to look at that areas. And when it comes to, let's say you after evaluating all the structures, evaluating your scenarios, you come back and say LLC is better for you, then go for LLCs. Now, if you have an LLC, and the most important question that comes up, how can I take money out every time? Every month I need money for my expenses. So you can take a distribution out from the LLC, but again, it should be governed in the operating agreement. That distribution can be characterized as a guaranteed payment if it's a fixed amount and done constantly. And then guarantee, what are guaranteed payments? Guaranteed payments are payments which are subject to Social Security and Medicare tax. It's like a payroll without paying any state taxes. Uh, you pay the federal taxes because you pay the federal Social Security and Medicare, but you don't pay the California, like you are in California, you don't pay the California tax, unemployment taxes, or like ETT taxes, employment training tax, which they are in California on that. Uh, EDD does not like it. EDD is a California, uh, California who governs the California tax regulations when it comes to employment. So EDD does not like it because they don't get any SUTA or any kind of employment tax. So if you are in LLC and two people coming together, one person is working in that company, one person should designate as a manager for that LLC. If you say is a member managed, of course, then both members are managing it. If it's a manager managed, then one person is acting as a manager. So in both cases, you have to designate one person as a manager. If both are managers, then both have to run payroll. That's ADD requirements that you have to run reasonable payroll because again, like I said, EDD does need unemployment tax. California needs unemployment taxes. How much payroll they can run? They don't need to run too much payroll. Maybe some payroll. Like in S corporation, you have to run a reasonable compensation, which is governed by the federal regulations. Not so in case of LLC, not governed by any federal regulations, but governed by the state regulation of how much payroll you need to run. So if you're making 100,000 profit in case of LLC, you can do some payroll, or you can do a guaranteed payment of maybe around 40K, 30,000 to 40,000 a year. Not more than that. You don't need to do too much. But at the same time, you have to also make sure when you do that guaranteed payment, 40K, you do it consistently, not like it should not show like a way of distributions. Distributions can be random basis. Guaranteed payments are consistent basis. Every quarter, every month, you have to take that money out. It's a fixed amount. Then instead of taking guaranteed payment, I always like to run a payroll because again, payroll is subject to California taxes, and EDT is looking for that. So run a payroll consistently. Of course, the employer portion of federal tax, employer portion do pay taxes on it, but you get a deduction on it. So in that case, LLC, when you take money out, you should take a reasonable salary, like 30, 40K. And if you want more, you can take a distribution out. and not in fixed amount or periodic amount or fixed amount or fixed time. Anytime you can take it out.
Now, Sanjiji, let me clarify two things here. Number one, I think a lot of people get confused when we talk about payroll. Because the moment you talk about payroll, they start thinking about corporation, like an S corp or C corp. A lot of people think that LLC doesn't need a payroll, and like you correctly pointed out, it's not whether it needs it or not. It just depends upon what you're really trying to do. If you have a good income coming out of it, you need to, either run a guaranteed payment or you need to run a payroll, because otherwise, how are you taking the money out? It can't be just distribution all the time. Somebody got to be running that company no matter how it is structured. So you said it very well. So number one mistake we see, especially people who did not use a professional to set up their companies. Maybe they did it online or they did it on their own, and they just don't know how to set it all up. And then they don't really come to us right away. They come to us at the tax season, and by that time they haven't run anything for the entire year, right? So that now they're kind of on a risky side of the law. So number one, we do have to run the payroll. Now, please clarify. Some people might only have real estate, for example, in LLC, and some people might have a business. And for the sake of argument, let's assume both are member managing or manager manage in this case, because you already clarified, doesn't matter. Either it's one, in manager case, you got one manager. If it's members, we just treat them all as a multiple managers, basically. So that's besides the point. But the main point is people who have real estate, do you recommend them to also run a payroll in this case?
Very good question. So, like I said, LLC is a very flexible structure. So it can include business, which is active business. It can include real estate or any other investment vehicle. So when it comes to the real estate part of it, real estate is not generating any income unless you are really managing the real estate as a real estate professional and you're meeting those guidelines as per the federal regulations, IRS regulations, the code regulations, tax code regulations. So meeting those standards. Otherwise, real estate by definition is passive. And when you put that real estate in an LLC, you're doing it for protection purpose, limiting exposure to liabilities. That's the main reason why you're putting that in that LLC. If that is the case, actively managing that real estate and you're passively managing it, you don't have to run payroll. There's no payroll for passive activity. For example, if you put money in a brokerage account or you put money in a CD, do you have to run payroll? No, it's investment. So when you have an investment vehicle like a real estate and you put it inside the LLC for liability protection purpose, you don't have to run payroll.
Okay, great. So that clarifies that. So I know a lot of you guys own a real estate under LLC, and you're probably panicking by now, like, what? We got to run payroll? Okay, so we get that past that. Second question is guaranteed payments. So a lot of people are probably thinking, okay, well, how do I do guaranteed payments? What exactly do I need to do? Do I need to set up something with the state? What do I do?
Yes, guaranteed payment are the is again it's part of your operating agreement. Like I said, LLCs are based on the operating agreements you have among the partners, among the members. Now, before I go to a guaranteed payment question answer, I need to also make it clear here. When I say LLC is very flexible, means you can also turn around LLC and treat it the way you want. You can treat the LLC as a S corporation. You can treat the LLC as a C corporation. You can treat the LLC as a partnership. So with that flexibility, you can always turn around and see if you're making too much money in the LLC, the net profit is huge, and you want to avoid self-employment taxes on that profit. Like I said, LLC, when you make money inside the LLC, you are subject to self-employment taxes in addition to income taxes, and you want to avoid the self-employment taxes. You can convert LLC to the S corporation by filing certain forms with IRS, and the state will also recognize that conversion. Or if you think you want to go to get money from outside or want to uh, look for angel investor or third party investors and they like C corporation, you can convert the LLC to C corp. By the way, QSPS calculations can also be there when you convert LLC to the C corporation. You can take the QSPS advantage, which is there in one big beautiful bill. So LLCs can be converted to any type you want. That's the flexibility it offers. It offers that flexibility. So now coming to guaranteed payment question, when you take a guaranteed payment, like a guaranteed payment is determined by the operating agreement. It's not determined by anything else, not federal, no state. But since if you are in California, like I said, EDD is looking for a payroll because they need state unemployment taxes. And when you do a guaranteed payment, you only pay federal Social Security and federal Medicare, but no state unemployment taxes. So if you have a manager who's working inside that LLC, better for it to run a payroll running a payroll that will give you that will meet the standards of the EDD, and they will not audit. EDD audits a lot of LLCs in the California for this reason. Generally, if you cover that case, generally guaranteed payment are important because guaranteed payment gives a flexibility in terms of what types of retirement planning you can do. That is important. 401k, DB plans, other things. Of course, you can do on the profit side when it flows to your personal, but guaranteed payment also gives that exposure of getting planning it better, and plus it gives you a contribution to Social Security in a different manner. So that's why it gives a disability also insurance from the state side. So it has plus and minuses, but you have to talk to your tax professional, make sure you connect with a CPA, and if you're looking for to connect with us, you can set up a consultation with us. We can definitely look into that. What makes sense for you?
Now, Sanjeev ji, another thing that comes to my mind, which some people might be thinking is, well, my LLC doesn't make any money. I have a business, small business. At the end of the day, net profit is only a couple $1,000s. Do I still need to worry about guaranteed payments? Do I still need to worry about payroll?
See, again, LLC is a very flexible structure. You can put it in the operating agreement that if unless the LLC is making money, you don't have to run any payroll. You don't have to do any distribution. So the IRS will not be against it because you're not making money. In case of S corporation, the situations are different because that's a corporation standards. Because you have to file with the Secretary of State uh, of the state, like a statement of information which shows who are the CEO and CFO. So it's a requirement that you're the officer of the company. Here, you're a member. You can be a manager, but you basically start with members and then becomes designated as managers. There's no filing as CEO or CFO requirement for the LLC. So there's no such requirement that you have to run payroll or do a guaranteed payment if you don't make money.
Okay, perfect. So there you go, guys. So now you understand, if you have an LLC, first you have to take a look at whether you're actively involved in it or you're not. That means whether it's an active income or a passive income. If it is a passive income, you don't have to worry about guaranteed payments or running a payroll. If it is an active income, then like Sanjeevji said, it depends upon your state. But for most people, there is some sort of unemployment law. I mean, I don't know. Is there any state that doesn't have an unemployment laws, Sanjeevji?
I've not seen it. State needs money. Uh,
Right.
I don't think any state other than maybe the tax-free states like maybe Nevada.
Yeah, I think even in Texas, you still got to have that unemployment. In matter of fact, they kind of recalculate every quarter or so, depending upon what's going on with your business. So anyhow, like Sanjeevji said, if it's an active business, you make money, you better run a payroll because that's the way you account for everything else. And then anything above and beyond your payroll, you can always do a distribution. And there are many other benefits. Maybe that's a topic for some other day. We can dig a little bit deeper into how do you build credit by properly running your LLC. That could be another one because a lot of people don't realize that in this country, if you want to build wealth, debt is extremely important. I mean, take a look at our national debt, how big that is. I mean, we use the debt to build this country. So you better learn how to build wealth using debt. So maybe that's a topic for another day because that's so important. A lot of people don't do that. So that was great, Sanjeevji. I think that's going to clarify a lot to people. Once again, I want to remind you guys, February 7th, you can ask all your questions live. Sanjeevji will be with me. We'll spend almost 30 minutes answering your questions. We'll talk about how do you prepare for your taxes for 2025. So please join it. Just go to sanjeevcpa.com and sign up for the webinar there, and I'll see you guys there. Sanjeevji, thank you so much, and I'll see you next week.
Thank you.